Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a little nice morning here in Denver, Colorado. Today, pleased to be joined by my friend, Mr. Ray Kimbrell. Ray, it's great to see you on the heels of a nice weekend we had together. Not just us, obviously, but us and about 600 of our closest friends back in San Diego a couple weekends back.
Yeah, never go wrong going to San Diego. It's beautiful out there. It was a great weekend. It was good to see you, Kevin. How you doing, my friend?
Hey, I am great. We have plenty to get to this morning, of course. We've got some markets on the move, needless to say. So we're going to cover as much as we possibly can for you today from the standpoint of news and detail, but market levels, important things to be watching. I have a feeling we'll probably also be discussing the emotional tie we all have to our portfolios and hopefully getting us on some sort of a path towards maybe how we're going to attack the market here in coming days. For many of us, it might be a lot of cash as we sit in sidelines, perhaps waiting to see how this all plays out, because Ray, one thing we know the market doesn't like is uncertainty, and boy, it's hard to look anywhere and not find uncertainty all of a sudden, isn't it?
It's all over the map. It's one of those things that everybody saw it when it hit, and it for a week now everybody's been going, oh, what are they gonna do? What's gonna happen? What's gonna happen? What's gonna happen? And everybody's still saying, what's gonna happen? What's gonna happen? What's gonna happen? So
exactly.
It's like I said, Kevin. A lot of investors look at the cash play as a way to combat some of that uncertainty, and that's one way of attacking it, obviously.
Yeah. Reminder that many times we traders think that we have to be in something we don't necessarily need to be. So we'll try and bring some of that levity to the table a little today as well. By the way, we're joined by our friend Barb Armstrong in the chat. Say hey to Barb. She'll also get to comments and questions that Ray and I are unable to get to. We're going to do the same though, keeping an eye on what's going on in chat there with all of you and try to engage with you that way. So we're happy to answer questions that we can on the fly here. So let's get one other note before we do. Reminder to follow the three of us on X: Ray Kimbrell, CS, Kevin Horner, CS, Barb Armstrong, CS. We're not hosting for you on the channel. X is the place to meet up with us here. Now, let's get to our disclosures and we'll dive into the conversation. Please remember that everything we cover for you today is considered informational and educational only. Simply put, we're not making recommendations for anything here. Additionally, we will cover and utilize technical analysis. What I mean by that is, of course, we'll utilize technical analysis to evaluate what we see in the market in terms of price action, but it should not be the only basis for making decisions in the market. So you can utilize technical analysis as one of your key components, just not the entirety of your decision making. We here in this class, we follow a top-down approach to the market. What that means is pretty simply, we'll start broadly. We hit up the major indices. We work into industry groups, sectors, etc., and ultimately round out our conversation with stocks in the news. We had a few upgrades, a couple of downgrades today, and I wanted to look at all of them with you. So we'll try to bring all of that for you here over the next 40 plus minutes. So with that, Ray, we're going to pull up and get started here on the SPX. We're off about 1%, but I'll tell you, the overnight lows in the futures were significantly worse. When you're looking at the trend here, what are we targeting, Ray? I mean, what are you thinking at this point?
Yeah, it's I like your blue line you have in there, that moving average. It's a 200-day, I take it. Yeah,
it is.
It is 200. What's going on and all the uncertainty, when things that kind of tends to hold as a support level, long-term support level. And as you can see, it's coming down to in previous days back in November, you see it at that level, back in October at that level. So maybe that's something to look for as a traders. What's the longer term looking for? Because as we know, this what's going on right now, hopefully it won't last a long period of time. And you can use that longer term range to say, okay, here's some of our strength levels, and keep that in mind.
Yeah, I think the 200-day is one of those areas that a lot of us traders look to in the belief that what's been going on can absolutely continue, meaning the 200-day should provide us with support on the daily chart. We should also, though, look at it on a bit of a longer range basis. Why don't we do this on a pullback to, say, the weekly chart? and kind of remind ourselves of what we could witness that would still be supportive in a much longer term trend, Ray. And that's the weekly look here with a 100-week moving average in there, that light green. Look at where that lines up, all the while going back to those prior peaks that we had seen right in the ballpark of around 6,100 or so. That could easily be a level to which we pull back. And I'll remind you, you know what? If we did such a move, Ray, if I put a line on here from our maximum level of 7,000 and change, right around 7,030 or so was our ultimate high, but a ballpark to that ledge, that's a pullback of about 13%, Ray. That is totally within the standard reasonable pullbacks that we get in the broader markets over the long haul.
Yeah, that's a good perspective, Kevin. I think it's an important thing to look at. Is what we don't have that future look, but we can look back and you can see those on that chart. And I'm pointing to it. So people can see me pointing to it. You can see that that range is right. In fact, what you're saying there, it's I don't want to say acceptable. No one likes that kind of a pullback, but it is within that range. If that's what you're looking at, and that's a great perspective. Right there.
You didn't want to use the word acceptable, but ultimately it's a level that a pullback that we do get frequently. And I say frequently, certainly more frequently than maybe we have seen of late. Obviously, we had a pretty significant pullback when we had the tariff tantrum and the Liberation Day move. The market didn't care for that because of all the uncertainty it brought to us. And then we rallied off of that low. And that's, again, a big level. Ray, we could also apply a Fibonacci move from this low to see what lines up here with that level, that 6,100 level approximately. I'd bet we get some sort of correlation here. Not to suggest that it has to play out that way, but we go up to about 7,000, and when we look at these ranges, look at that 38% ledge right in there. Kind of coincident with all of those possible support, isn't it?
Yeah, that's right on it. And you could see those ranges that it bounds within. And again, as time goes on and, looking to the future, when this ends, you can see that there's potential retracements back up into those ranges.
Yes.
How it trades. So that's a great tool to use, or a great drawing to use.
That's the thing, Ray. It's one thing for it to provide support. If it does hold support, right, when we view Fibonacci levels as being supportive in price, the reminder is what comes after the fact. If that is supportive in price, then the reason that a bullish trader likes it is that it's believed that the trend in which we came into this most recent move, bullish to the upside in the midst of this pullback, they believe that the longer range trend can thereafter continue to the upside. So brief pullbacks, 23% retracement, 38% retracement, even the 50% retracements can be levels where we get those bounces in longer range continuation moves. Yeah,
and they're excellent to kind of help identify when folks are just learning how to use some of these tools and drawings. As you said there, it's not really coincidence how that support levels or resistance levels come in when you use the Fibonacci. And it is a good tool to kind of hone your eye into where the potential moves and bounces can occur.
Yeah, exactly that. We know that it's not going to work every single time. That's why we talk about it from that probabilities standpoint, right? Not certainties as it relates to the broader market. While we're doing the look at the SPX, Ray, it's probably important that we look at the VIX. The VIX is only up 5% right now. It's taken a little bit of a breather, but you can see on an overnight basis, it got up there pretty elevated, up to 35. Yeah. And if we looked at it on a short-term basis, it's just kind of filled the gap in here. Does this kind of have the feeling of perhaps the calm before the storm?
Yeah, or one way to look at it, one way a trader may look at this is, even though there's uncertainty, people, as the events occur in the Middle East and folks are watching what's happening, they kind of understand it more, and it's not as, oh my gosh, everything's coming to an end. It's going to be, people becoming more educated around what's happening, and so at least it's understood more. you might say. And
Okay.
so, as things calm down, like, I know you're probably going to get into the oil discussion later on, more than likely, usually do,
Yep.
in hitting those levels, and one thing it did, went up to what, 120 a barrel, 121, that range, and it pulled
Yep.
back to 100. So, as they started clearing things and let's say the oil does start running, some of those fears may subside and the market may like some of that.
Good point. In fact, if we just took a brief snapshot in our mind's eye of this chart of the VIX and then look at what oil looks like, it's almost like they're running similarly, right? Oil pulls back, VIX pulls back, not as much concern. If oil starts to rally once more, then we start to get a little bit more concerned. But look at what the level was. I mean, we gap basically late last night. We gap in to this new level over 98 a barrel, and then we pushed it all the way to 119 and a half. I mean, that is in what are we talking about? A matter of 4 hours, we saw oil jump 20% before retreating. Ray, standard technical analysis 101 stuff. Breakout, throwback.
Yep. And that's playing out. And right now it's, staying pretty steady. It's just, I mean, obviously the market's just open, but it's good it will, as they say, you got to see what's going to happen.
So this big move in oil obviously is impacting us dramatically. Of course, this is the biggest issue as it relates to our markets right now is the elevated price in oil. I did read on X here just a moment ago about Saudi Aramco closing down a couple of wells, which are going to have an impact on supply as well. We already know that there's a bit of a blockage in the Strait of Hormuz, even though it's not officially closed. It's also not necessarily conducive to moving all the barrels that we are used to moving through there, Ray. So it's a bit of a delicate situation right now.
Yeah, it's not flowing, and some of the insurance things that the government tried to put out there to ensure the flow or ensure the ships as they move through. Because it's not just oil. I mean, oil is one of the big ones, but other things moving in and out of there as well. And if the U.S. Navy is able to escort them and start opening up some of that flow, we may see some positivity.
But that at least gives us some understanding of levels we need to get back below. Obviously, this $100 ledge is very substantial to us. I'll point out just how much of a rally we've seen in oil. It hasn't been that long, everyone. Go back to just the 27th of February where we closed the market prior to the conflict. That's a 77% move to the upside if we go up to the 119 and change a barrel. Guys, we can't sustain that too effectively here. So this is not a good development. It's likely the biggest reason we continue to see the pressure on the broader markets. It is obviously inflationary in nature and is going to potentially, if it remains elevated, Ray, continue to put a strain on us collectively here.
Yeah, and obviously it's a global thing. The U.S. oil coming from there, the U.S. need for oil coming from there is pretty small compared to a lot of the countries. Obviously, China, huge to China, obviously.
Yeah. Okay. So remaining as best we can objective to what we're seeing, the reminder needs to be probably, Ray, that we are in the midst of the risk-off situation and that we traders need to recognize the areas with biggest growth opportunities are likely the ones that we've seen taking on the biggest hits to the downside here, and that's that risk-off mentality. When growth is your driving factor, growth gets squeezed in inflationary markets, unfortunately, and an elevated oil barrel is really hitting us hard. So, Ray, this is having a major impact not on just the Nasdaq as we see here, but also our biggest leaders traditionally, semiconductors, and then this year at least, small caps. So we'll get to those momentarily, but talk to us a little bit about what you're seeing in the way of the NASDAQ 100.
It's kind of right back to the SPX. It looks real similar using that 200-day moving average, that pullback, looking to those levels of support and longer-term support. As you said, for those for growth-oriented or you're gonna hold them a little longer. That's what your intent is. But you need, we all want to see, where can that potential bounce come? Where is that low that's coming in. And on this, you can see it's, I mean, it's right on that 200 right now. It's right past, right back in beginning of December, end of November. You see the same level right there. You see where it was a resistance level back in August that it broke, or September, I should say. And
all the way back here, right?
Yep, looking pretty consistent as you see those pullbacks. The same thing you alluded to earlier, Kevin, with in the SPX chart. You're seeing it. You're kind of seeing it here in the Nasdaq, which a lot of times they don't match up. You can see some differences between those, but here it kind of it is. I mean, we're looking right at it.
Yep. So that level here, Ray, seems to be pretty important, right around 23,900 or so. I noticed there's a little bit of a, what some might say, a double top up here. We had one there, had one here. And that tells us a little bit about this ledge too, isn't it? Because that level is the lowest we've seen in this range. If we traded under this level, could we make the potential, we could do a measured move calculation from here, right? I mean, we could almost say that if you took out the white line down below as support, we could draw the distance from the peak to the line, to basically the peak to the support level, and then take that and add it down below, and then we get an approximation for what a move could look like. And Ray, look at, I mean, it goes back to the summer here, and it kind of lines up with a gap level, or at least a range of former resistance, could be potential support. Ray, the market's entirely capable of making such a move, but look at the distance we're talking about. It is not a huge move. 17%. That's not even a bear market, Ray.
Yeah. Go back to April, that big dip in April, and you got about the same distance move right there. Yeah.
Yeah.
And so
you're right.
Yeah, it's not an unusual thing, and it's not is it a painful thing?
Yes.
If you got holdings in those areas, yeah, it is. But it's, and again, that's where your risk levels, you talked about, Kevin, is, how are you set up your portfolio wise? Are you very heavy in tech level stocks, or you're not, or?
Ray, I got to say, there's a lot of questions or comments in the chat here about cash being a position if you're a trader, and maybe about managing our own emotions a little bit. We talk about these things in the in-person events. I try to talk about them here as well. But Ray, there's really no substitute for just general comfort, right? Understanding where we as traders are most comfortable with the amount of risk we have on the table, dollars in our portfolio, ready to act when the market speaks to you a little bit. Those are all steps we need to be taking, right?
Yeah. Matter of fact, in the live events, we hit that pretty heavily, and we discuss risk and how are you positioning yourself in individual trades. We don't get into, in the technical analysis class, a lot of portfolio management. We have webcasts on that, obviously. But the individual risk per trades, and how you position yourself. When you look at something, you're going, oh yeah, this has got to move up, or it's got to move down. Wish we could say something like that, but you can't say that because you don't know. And that's where you have to use a proper risk analysis and see where you are and protect yourself. Because things like this happen, and you got to be ready for it. And and you start off the morning with, is cash a position sometimes? And for some traders, it is. And it's, sitting on the sideline, wait through things. If you're able to do that, might be, for some traders, the way to go.
Yeah. And you know what, Ray? I'm reading a great comment. James here on the chat, frequent attendee of the show, putting reminder out there about it's your time frame, right? It has a lot to do with how you approach these types of moves. These short-term moves, as a short-term trader, they feel significant. But if you're that long-term investor, or maybe you've got separate assets invested separately in different approaches, one of those might be that long-term approach, which gives an investor a belief that anytime you get a pullback of better than 10%, you need to start deploying a little bit of money, because we just don't know where those intermediate term bottoms come in. Long range investors take advantage of price moves that go against the broader market and utilize those pullbacks to deploy new funds at appropriate levels. And they do that consistently because they're going to be invested for an extended period of time. That's a lot different, though, Ray, than what we generally talk about as traders. I think we commonly talk about the swing trading methodology, the approach to in and out of a position over maybe 3 to 10 sessions, Ray. It can be very easy to forget the importance of the long range mental approach too, though, can it?
It can be, and that's where, and some folks that are not long term, they're the swing. That's all they do is swing and trend trade. This can be very mentally tasking, obviously. And then when you don't understand one version or the other, that's where it pays to get that education, get the understanding of whether you trade that way or not. It's good to understand the different aspects, so you can correlate. How do I want to approach this, especially at times like this when you have a lot of that uncertainty and you see those pullbacks? Is this something that a swing trader could take advantage of? Or is this something not? Or is how to, if you're a long-term trader, you're more tending to hold on through this. How do you protect against some of those downturns?
Yeah, it's also good, Ray, because when you start thinking about it, you'll find you're going to fall into a certain category. One of those categories is going to be, am I comfortable being a trader? Do I like all of this day-to-day machination and discussion of the market? Or maybe I'm the individual who finds no comfort from what happens day to day, and I want to step away from things and maybe look at the market less frequently. There's a right way to do it for each of us, but the right way probably changes for all of us. Pick the way that is most comfortable for you. Monitor the market that way. Don't put yourself in uncomfortable situations or scenarios. That's the best I can encourage you to do, I think. Ray, what I'm looking at here as we look at the Russell 2000 is a pretty significant drop. We fell out of trend here rather quickly over the last 3 days.
Yeah, it's all the major indices are hitting this. When you go hit the Dow, eventually you should probably show that too. But it's all you could say is you got to. I think Paul Montgomery had a good point here on the chat. You play the markets in front of you, not what you want to see. You got to play what you're seeing, and it was matter of fact going into the last 3 days. It was really doing much nothing. Kind of indecision, just kind of running along, and then you got the last week, and it's feeling it.
It sure is. I'm pretty I'm largely of the belief, Ray, one of the biggest reasons here, of course, obviously, if inflation's going higher, if oil is higher, then small caps are going to be hurt. But the other area to be paying attention to relative to small caps, of course, is yield. And as we've gone higher in yield, we've seen pressure on the small caps. Yeah.
I guess the thing that all the traders got to look out and see out there is, oil, the big fear of the oil, even though we don't get our oil from the Mideast as much as we used to, it's dramatically lowered. Other countries do rely on it. Other countries it affects their pricing of goods and services that we may import or how the trade goes. So it's unfortunately, it's not as easy as, well, we don't get our oil from there, but other people do. And there's other countries that supply us oil that are not affected by the Mideast, but their economy might rely on things that are coming from other countries where it does affect them. So it is a global market. It's a huge global market. And even small cap stocks like in the RUT are affected greatly by that because they are smaller. Those fluctuations hit them even more dramatically at times. And that's kind of why you see in that last chart when you head up on the Russell, maybe that's one of the contributing factors to that, a little more of a downturn you see there as opposed to in the SPX or in the NASDAQ.
It is, it's again that risk off situation, right?
Right.
Comfort for the broader markets when we have the risk on belief, we can trade in the companies that are high growth, high risk in theory, right? These companies that are small cap, they just have a higher risk because they are all likely carrying a higher level of debt. And as rates go higher, that hurts and hinders them, of course, especially when they need to re-rate those loans, right? If they have, if the maturity of existing loans at lower rates is coming due, and now they've got to re-rate those at higher elevated levels, that becomes problematic in terms of just doing business. So that's why you see some of the strain on small caps here as well. Let's take a look, Ray, at the other thing that's two other big ones here. The semiconductors are leaders previous, right? Again, risk off. We're noticing this breaking down as well. Doesn't look like we're going to be able to maintain what I had deemed as support there as of just last week, Ray. Right at this ledge, we've already fallen through it. So again, volatility and anti-risk taking over here, it seems.
Yeah, I tend to agree with you on that one. I think you're still kind of close to that level, though. It may, that's one of the things you want to watch close. Is it going to hold? Is it going to break through and continue down one next level to another level of support, probably around the 7,000? The next, keep on going down a little more. Maybe
you want to go a little lower?
Yeah, right in there, maybe
like right in there.
Yeah, 7,068, somewhere in there.
Okay,
but this, as we talked, it had a little pop-up green there. So you never know. You're right on that support. As we all know, those support and resistance levels are areas, are not exact price points. And so, could it hold there? Depending on what's going on. I mean, your RSI is getting down to that level of lower ranges. So, could it extend out? We'll have to see. But a trader might see that. But I like where you have that drawn, because it is a good level. I mean, if you go back, it's a good level of a support area, that 72. And so, I think you're right, though. I think by seeing that, is it going to fall through or not? Is it going to go down to the next level? So that's why it's important to go to those technical analysis classes, learn how to draw on support and resistance, and use those areas.
I'll tell you, we don't know what's coming. I mean, we have obviously ideas. Kelly thinks it's going lower here in the SOX, perhaps, and the probabilities, now that we've broken the 50-day moving average with some conviction on Friday, because we were balancing on it there for 3 days before the breakdown Friday. I feel like this stands out as a higher probability for downside risk now. So you're not wrong to suggest if you expect lower movement. My encouragement, of course, is if you expect lower movement, always have the follow-up to that. What if I'm wrong? So what am I going to do if the market changes? If a market gives you a signal that says, okay, lower is not as likely as it was, now you have an opportunity to trade for bullishness. And what time frame are you thinking? And how much comfort do you have for it? Should it be a full position size, Ray, as compared to maybe just a portion of what you normally would take?
Exactly. So one of the things that we do teach, Kevin, in the classes, and I know you're a big part of this too, is before you got into any trade, what was your exit strategy?
Yeah,
and hold your plan, because a lot of investors sometimes have that. That's one of the hardest things. It's easy to get in, but it's that getting out that makes it a challenge. So that's one thing I can add to all the investors, traders out there. No matter if you're a long term, a swing trader, a trend trader, doesn't matter the type, what you're playing. Did you look at that exit strategy before you got in? So when these things do come up, you feel a little more comfortable with where you are because you had that plan.
Exactly. That's when, I'll tell you what, when you have the plan and then it actually plays out that way, then you're prepared to act. Oh my goodness, it's a really good feeling. Even if the trade doesn't work, if you stepped into it with proper process, I'll tell you what, that can be really, really instructive for us as traders and really positive. Ray, I also just drew the Fibonacci move on the semis from that low, that Liberation Day low, to the peak we just made 2 weeks ago. This is a pretty interesting spot here where we're closing in right on that 23% retracement.
Yeah.
Now, the reminder on the Fibonacci, guys, if it's a mere 23% retracement, Ray, if the support here holds at this level, that would be really bullish for this space, because if it's a hold up, and that assumes, of course, we continue upside from here, that's a very brief pullback in a strong uptrend.
Yeah, I agree, and that's the thing. I'm glad you said that, because it is still overall long term in an uptrend, folks. All right, yeah, the short term definitely down, and no one's going to dispute that. No one's saying it's not, because it is. If you look straight at it, I mean, it's the definition of a short term downtrend.
Yep.
But it is in an upturn. It is in a long term uptrend, and as Kevin just said, that 23%, that Fibonacci holding that can show a potential bullish move in that range. Because it is an uptrend.
Yeah, we'll see if 7,300 holds. Ultimately, it can be a level, though, and you have at least a reason to give some consideration here. That can change very quickly, Ray. Obviously, if we were looking at it, on say a 5-minute or 15-minute bar, you can see the level we've sat on here. This first ledge of support, utilizing the pivot points, it's a pretty good ledge. But if taking into account, just briefly here, everybody, always be thoughtful about your time frame. And if you're taking into account an overall view that the semiconductors could lean bearishly based on what we've seen on that daily chart, then a lot of traders, even if you get a bounce here off of this support 1 level, would look for the bounce to start losing momentum as it runs into that 20-period exponential moving average that I've got on this chart, or potentially into that pivot point. The fact that we gapped that first pivot, everybody, is really important. We gapped it to the downside. Basically, the pivot for the day is this one, 7,400. Holding this level can be good, but it doesn't mean all good unless we start a new uptrend from here, Ray. And I think that's very important to discuss. If you're trying to be a short-term trader in the midst of the broader trend, it's important to look at this stuff intra-period.
Yeah, it's a good point, and I like how you have that exponential moving average. And look, and by the way, folks, look how that is running right along at its support resistance level. I mean, it is I'm pointing to it again, as they can see me pointing to it. It's showing you a lot of that price action, right along in it. I mean, Kevin, you nailed that explanation really good on that one.
Hey, thanks, Ray. Always great to hear that. I appreciate it from an individual like yourself.
All this wisdom pulling out of my face. It's like
I can put a feather in my cap with that one. Thank you, Ray. I appreciate that. Hey, we should also quickly chat about the transports, because we've noticed a pretty good move here. Again, largely tied to what we've seen in oil. We had a strong uptrend in this space. It's been absolutely hammered, though, as you can see, the last 3 days. Those big, ugly red candles filled in all the way. Yeah. And with oil spiking so aggressively, I'm going to put up some others here real quickly. So here's a look at the truckers. There's a very big side of that, right? And we can see the same thing in the airspace as well. So your commercial air just getting absolutely beaten down. This is an interesting spot for horizontal support, perhaps, or we're closing in on it, maybe, right there. And then the other is the rails, but we're not seeing quite the sell down in the rail stocks. But Ray, regardless, this is a noticeable move.
Yeah, I mean, obviously fuel dependent industry companies. And when the price of fuel is going up, they're going to feel it. And it's, the life we live in. But yeah, I mean, once the oil stabilizes back up, we open the straits up, we get back to some normalcy, we'd like to see that obviously retrace back the other direction.
But that probably means, Ray, that we have no option here but to continue to monitor oil for this reason specifically. I mean, we can also look at the impacts this is having on your cruise ships. So, what about Carnival, for example, looking aggressively lower? Norwegian, same thing. Aggressively low. Even Viking is showing a significant pullback here. So this is extending to groups and be thought. So ultimately, my encouragement is to be thoughtful of the groups that are most linked with oil, and we've seen a lot of that. We've spoken to a lot of that today already. So hopefully what we've done is kind of given us something to keep a close eye on, something to monitor. I think it would make a lot of sense for many of us. Maybe we take an approach that has us detaching your individual chart here, throw it to a separate monitor, put oil up there, and just have it watching it, keeping a close eye on oil, because the movement in oil is going to be likely dictating what happens here in our market for the immediate future. Watch that $100 level, very, obviously a round figure, but a significant level as cost as well. So, and then we've got the gap level we created from this weekend into late yesterday when we opened the futures. So levels that you can set risk against as it relates to oil, but also understanding the pressure it is putting on our broader markets. Now, we do have a little bit of a bounce underway as we speak. The VIX is falling a little bit here. The SPX only off 1% when we were off, 1.5%. So we've got a nice little hammer candle there, Ray, and a possibility of a 15-minute bar of getting a hold short term. Maybe we get a little bit of a bounce into the 20-period EMA here, maybe, Ray, and this is also these recent lows, so perhaps this acts as resistance.
Yeah, and I think just the heaviness of the news over the weekend and just all in total of what's happening. A lot of traders, look onto the Monday morning as, a lot of information is coming in. Markets gathering a lot of stuff over the weekend, and how is it playing out in that uncertainty mindset? And that's a huge thing, and putting it all together to think, okay, where are we, that kind of thing. It's going to be a key aspect.
Yep.
This as we talked, we got a big jump, the Dow, or big drop, I should say.
Yeah, and it's because of this. Look at that. See that candle?
Yep.
You see that candle right there on oil? It just popped back up through the 20-period EMA. So there's an explanation. It happened. They went side by side. SPX rolled down and crude oil went higher. Now that's still 9 minutes remaining in this bar. So that means we have to see, does the 9-minute window carry and hold that green bar above the R1 or R2, excuse me, here, this red line, and the 20-period exponential. But if it does, the implication is for the elevation in oil to hold for the day here would be my concern. I noticed, everybody, we had a survey in the chat. If you'd like to take a minute and offer your thoughts and insights, we always appreciate that. Reminder, I only get Ray once a month, but I do rotate my Monday co-host. It's always great to have Ray on. Nice to have him on any Monday, but one where we've got a little bit of volatility makes it even a little bit more entertaining. Hey, Ray, we've got some. Oh, go ahead. I'm sorry.
No, I'm just glad I'm here. I always love coming in for you.
Well, that's why I like having you. Ray, I have a couple of stocks that were upgraded that I wanted to look at with you briefly. One of them is in the material space. It's Dow, D-O-W. I've been keeping an eye on this because it looks like we've recently made a shift out of a former downtrend into a potential new, actually a new short-term uptrend, potentially something a little longer. They were upgraded at RBC Capital to outperform from sector perform. They had a new target on this one at $40 from $29, stating that the firm is more positive on the stock given these recent events in Iran specifically. I'll remind you, everybody, target levels from an analyst or a measured move calculation, these are never guarantees to be achieved, of course. But Ray, when you look at what's going on here, it does look like an improving chart in a space that's provided leadership on a year-to-date basis.
Yeah, I mean, you got that right at that level of resistance, attempting to break through that area right there, which RSI is moving up. A trader could look at this and see some positive movement. So even in an overall down market, folks, you can see that And back to earlier comment in the chat, you got to trade what you see. And, and that's what you're seeing. You outlined it wonderfully with it breaking that resistance level, seeing if it's holding up. I think that would actually, did it get a recent upgrade?
Yeah, just this morning, from RBC. So, a new level the target again at 40 implies a, $5 upside somewhere around what, that's not bad. That's like 15% nearly. So, if it can make that level, but I think the bigger thing when I was evaluating it was really just the broken downtrend. If we looked at this one on a weekly chart here, Ray, you could see we've got the 100-week not too far above us. So maybe a pause level in the neighborhood of 37 if it gets up there, but it's been an improvement nonetheless. And then that 50-day crossing the 200 just a few weeks back. So looks like a nice little improvement here. And again, as I mentioned, in a group that's been providing leadership, it's always nice to see when we take a look on a year-to-date basis from a trader standpoint, we kind of look to trade our leaders, right? Leaders in leading spaces. And materials has done decent here this year, 6%, even though it's in the midst of a little pullback here. So that's where that one came from. The other one that jumped on my screen, shockingly here, this is Brinker, EAT. Now, this one, Ray, this is a very different looking chart, isn't it? This is not exactly a bullish look at the moment.
Yeah, put a minus sign in front of EAT, make it look a little nicer.
I love that trick. Let's invert the chart.
Invert that chart. There you go.
Yeah. If it were inverted, Ray, I could see how a trader would look at this and say, yeah, that looks bullish. Unfortunately, that is the exact opposite of this chart. It is, in fact, unfortunately, making a new short-term low here today.
It is. And that low is right. I mean, it's right at if you go back, I have a 6-month chart in my view of here, looking at the same things, because I'm getting old and I got to have bigger charts now for my eyes. It's right at a level of a support level right now, that 130 range. Back there. Depending how you draw. Again, remember support resistance area, big fat line like you just drew there. So right on it and see if it holds. But that's going to be one other thing I have also on my chart, Kevin, is I have the MACD on one of the technical indicators on there, and it's still showing a lot of negativity on the MACD side of it, rolling back down.
Let's see. Oh, I see what you're saying. Yeah, because those lines are still diverging from one another. And heading lower, and your histogram is not getting any better either, unfortunately.
Exactly. Yep.
That's a good point, Ray. So they were actually upgraded. This is why I brought this one up, Ray, was because there was an upgrade. The chart doesn't speak too great. However, Wolf Research upgraded them to outperform from peer perform, put a 184 price target on them, on the name as they assume coverage, calling the Chili's unit specifically of Brinker, owner of Chili's and Olive Garden and so forth, that they have earned value credibility, and their traffic has outperformed. So I guess we'll take all positives that we can as that relates. And then I have to give you all one that did stand out as well. And this is going to be a quickie for you. And that's on Starbucks. Starbucks got downgraded at Wolf Research. I mentioned that because they are at an area that some traders would call resistance. And it's if you could draw your pennant maybe in there, Ray. It could be a pause in the midst of an uptrend. It could also be a rejection zone. Not ideal to get downgraded at an area of potential resistance, though, right?
So, it's staying within that pennant range, though.
Yeah.
So that's kind of an interesting thing. And on the MACD, it's starting to roll back up a little bit. So that'd be interesting to watch. I think it'd be a good one to put, as a trader, to put on a watch list to see where and how that's going to trade between the support and resistance coming together. Which way is it going to break out?
Yeah, you don't have to take position. I mean, any trader waits for the move to happen and then trades one way or the other, whichever direction the trend goes. So a break of the downtrend line to the upside, or one of the uptrend line to the downside, one way or the other. And then very last, everybody is this is a spirits company, Brown Forman. They are, I thought maybe we were getting out of the negativity associated with spirits and alcohol, but it seems, Ray, that we are not. Those companies offering spirits, alcohol, beer, etc., they are just continuing to languish. They got downgraded at Bernstein here. Just wanted to bring it up because evidently this is a different window of time, Ray. Not as much alcohol consumption as we have seen in the past.
Yeah, and sometimes, traders will see out there when you have times like this, those kind of stocks go the other way, obviously, but
yeah,
not in this case.
It hasn't happened yet.
Yep.
They always say sin stocks sometimes can perform well in good times and bad times, as it were. Yeah. So we'll see. As always, Ray, wonderful discussion. Love having you on here, man. Thank you so much. Let's look forward to reconvening in April. After, of course, you come out here, if I'm not mistaken, I'm going to see you at the end of the month for the Denver event.
Yeah, I'm going to be out in Denver.
Look forward to that.
And Scott and I will teach a virtual technical analysis workshop coming up. So go to your education, your live events, and it's in there. You can sign up for that class, and we'll be teaching it in April.
Terrific. Thank you for bringing that up. Check that out, everybody. Schwab.com/coaching has the live event calendar as well as our YouTube calendar, of course. So thanks for being here this morning. Big thanks to Ray. Make sure you're following the three of us on X. And, of course, big thank you to Barb as well today. And don't forget, we have that survey opportunity in the chat. If you had any comments, we'd love to hear from you. So don't forget the thumbs up button down below as well. That'll help us out in the replay when we get this reviewed and back on into the archive. So with that, have a fantastic Monday, everybody. We look forward to seeing you all again real soon.